Thanks for tuning into the FinTech Flo. I want to give you a heads up that if you are looking for CPE credits, this is eligible for 1 hour. If you'd like to learn more, check out the link in our description to get those credits. Hope you enjoy the episode.
So FTX wants a refund on the donations made to the politicians who were supposed to protect them.
And I know it's tempting, but you can't delegate your work to ChatGPT quite yet.
No, you cannot. But if you're 23, you can sign off on an audit, though there may be some consequences to doing that. So what's going on, everybody? This is the FinTech Flo podcast brought to you by FloQast Studios, making content by accountants for accountants. And the show aims to take on what's happening in the news and media, including social media, finance and accounting sectors, and everything from a fintech and entrepreneurship sort of lens. Now, if you're listening to this for the first time, which you all should be because this is the very first episode of the show, you probably want to know who we are. So I am Drew Carrick, producer at FloQast Studios, known in the accounting world as the Rapping CPA, or perhaps by my stage name, Petty Cash.
Nice. Love the introduction. I'm Mike Whitmire, co-founder, CEO of FloQast, also an inactive CPA proudly, and excited to be here. And yeah, given first episode, by definition, this should be the first time you're tuning in for this. So looking forward to it.
Yeah, we're looking forward to putting on a good show for you guys. And we got a great show ahead, getting up to date on the fintech news and media, checking in with our good friends on the accounting subreddit, which is always an exciting world to
looking forward to that one
to dive into, and just enjoying some classic memes. And because who doesn't love a good meme? So yeah, with that being said, let's get flowing.
Let's do it.
So first section that we want to really handle here is getting up to date, right? So articles from the accounting profession, Accounting Today, Journal of Accountancy. We've got some good ones that have happened over the last couple of weeks. So this first one is about, let's ease our way into the podcast with easing the transition to mid-market software. So one of the things that this said is, one sign that it may be a time to make the leap from an entry-level accounting package to mid-market software is difficulty getting an accurate, complete, and up-to-date view of the business. If your client's accounting platform can't give them answers they need or it takes too long to get them, it's another sign that it's time for a change. I feel like this is very suiting when it comes to entrepreneurship and fintech, and FloQast in particular, because at what point is somebody ready for like a FloQast type of program?
Yeah, totally. I mean, and this is an interesting evolution in software, right? So even as recently as when we started FloQast in 2015 was when we started selling FloQast, right? There was this weird stigma in the investment world against building mid-market software because it was sort of viewed as this like death zone for who's going to actually buy software. So I think it used to be much more difficult because you're like on QuickBooks and then it's, do I go to Oracle? That's a big leap.
Huge
you got
jump.
some steps in the middle, right? So I don't know how many clients you had back in your audit days that were on like QuickBooks versus Oracle, or if you had anyone in sort of the Intact NetSuite zone, right?
Yeah.
That's the mid-market type solution.
Yeah.
But I think what's changed in that area is a lot of software has been developed for the mid-market at this point. So you have a lot more items that are purpose-built, make more sense for like the leaner team. They want to, be agile, set things up on their own. So I think in terms of knowing when to make that transition, there's a little bit of a like art and science to it. So yeah, everything you just presented, right? Those are obvious issues for it. And then it's, is my team working too much? Like, are they grinding it out? And then what are our growth plans? And if you're a company with 5 people in accounting and you're on QBO and it's like working good enough for you, whatever, keep doing that. But if you plan on growing, then you need to think a little bit bigger and adopt it as a mid-market company.
Well, when you started at FloQast, right? So obviously it's just you with the PowerPoint presentation, right? You build out this idea, you pitch, you get the money, start building the prototype, start assembling the team. At what point? Well, do you remember what was your first information system that you even had?
We use Xero. We started on Xero as and I did the accounting for the first couple few years, and then our first customer success person we hired, Lilith. She actually took over the accounting because she wanted to do accounting while implementing our clients as well. So yeah, we started with the most with the classic SMB option was Xero. I like Xero because I got exposed to it at my prior company. We had acquired a company that was using Xero, and so they gave me the credentials to log in, and I was just like, wow, this is super easy to use. And so I went ahead and used that one and just bought it at FloQast. But we really quickly moved over from Xero to NetSuite, like where we knew we were going to grow. We had big plans. Xero wasn't going to scale. NetSuite's a partner of ours, a really good partner, so we wanted to become a customer as well. So that's a that's a good example of art and science, right? We didn't have like a glaring pain around that, but we have bigger ambitions. We got a partner that we want to work with more closely. It made a lot of sense for us to pull the trigger like earlier than most companies.
Yeah, I mean, kind of to your point, the whole mid-market, I feel like that's like a mystery zone for a lot of people. There's people who are like specializing in small businesses and like how to just kind of get by with your lean, mean team. And then there's like enterprise level solutions. Like that's what I'm used to seeing. So even now when I have a friend who's like starting my business, you know, we've got like a couple employees, like we want to try to grow. I don't have a lot of insight that I can really offer them because like I'm used to dealing with things on such a macro level. You're using like the ADPs and it's like, well, how could we actually run payroll and do all this sort of stuff?
Okay, so your clients, what you were working on was like much more in the enterprise space and more the SAPs, Oracles, ADPs type world. Yeah, it's a whole different ballgame when you're at the QuickBooks and Xero level. They're just differently run companies. And I don't know, it's nice that there are more tools coming along because what ends up happening is like to do well in the mid-market, you need an easy implementation and ease of use. And accountants need that because we're getting burned out, right? Accountants are grinding. We need an easier way to get the software off the ground so we're not disrupted all the time. And that's what makes it hard is you need to offer enterprise level features and functionality and support that. However, it needs to be as easy to use as SMB. So it's like, oh my gosh, I got to hit both of these things. And what's fortunate is like in accounting, that's starting to happen a lot more. But I'm sure for you guys on the production side, I'm sure you have a lot of great pieces of software that are like enterprise grade being used by Fortune 500 companies, but easy enough for the team here to figure out how to use.
It's the prosumer movement now where everybody like you want to be able to be a pro, but at a small scale. Because otherwise, I mean, even just the administrative burden, right? I even think about it like when it comes to taxes, everybody's like, oh, I want to start a business. And it's just, nobody allocates for the fact that you're going to have all of this administrative cost that's associated with that.
Totally, yeah. Administrative burden. Did you steal that from me or did you have that independently?
I had that independently. Is that something you say all the time?
Oh, it was one of my lines at Cornerstone. If I didn't want to do something, I'd just be like, I don't know, that adds a lot of administrative burden to our plate. And it sounds so professional, you can kind of get away with it.
It's so true, yeah. And then the difficulty that a lot of these companies kind of, as we're talking on, sort of go into and just kind of paraphrase is that the amount of effort that it takes to get like, to move one of these initiatives, like getting that buy-in. I mean, I don't know if you have any insight to this, but like, how do you kind of galvanize the workforce to like actually get them buy-in to do the thing? Because how many times I've worked at companies and I've worked at companies that have been clients of mine where they get the system and then they don't use 90% of it. It's just like, we got it because we said we needed to get it. We had to upgrade, but now they're still doing everything the old way.
Yeah, that's really interesting. I'm curious if you notice like a persona type with those people, because I feel like for someone to really make a change, something either has to be very broken. It's like, man, we got to fix this, or you have a leader who's a little more visionary, forward thinking, and just like wants to scale better and thinks about those types of things. So I'm curious, was yours the forced buyer who had to deal with this stuff, or the forward thinking folks?
It seemed to have been like where from the top down, there really wasn't a care about doing it. It was like done because either peers were doing it in the industry. And so it was like, all right, we're going to get this. Like I remember we did have Oracle and we had all these different modules that you could use for all different purposes. And like 2 of them were turned on out of the 15.
Well, that's also, I would say that's also like Oracle's fault in many regards, because a lot of those companies, when you get bigger and like Microsoft falls in this camp, they just sell a bundle. It's all or nothing. You don't get a choice on it. And they do that because the products aren't necessarily the greatest, right? So it's easier to, like even what we do, Oracle has a module around that. And it's like, oh, they just bundle it and it's free. So we hear customers all the time, oh, well, it's free. Why shouldn't I try that? And it's like, yeah, it's free for a reason. Like this, it got bundled in for a reason. And so you see the best in breed solution that's for the mid-market. All of a sudden it's easy, makes that purchasing decision like much easier.
Yeah, absolutely. So now we're talking about AI and how it sort of accelerates. I mean, AI is the hot topic now with ChatGPT, and they're talking about how it accelerates now the cybersecurity race. I mean, we were already moving to this motion where you're dealing with new emerging technologies. How are you keeping data private? How are you keeping it secure? And I didn't think about this. I think about all the opportunities and like the scary ability to like deepfake people using AI. But it's actually like the ability to have an AI write like a malware, or just it can code faster than a human can code. And you have some experience kind of witnessing that happen.
It's like, we've been looking into it obviously, and I know you guys have been using it for some various things. It's like, it's pretty mind blowing what it can do. I will say it's not perfect at this point. Like as I've dug into it more, particularly on the accounting side, it does make some mistakes, but you could presumably say, hey, write a virus basically that does this, and it might not get there the first time, but if you're a smart engineer, you could probably work with it to build something pretty quickly. So it's like, there's enough gray area with this and so many unknowns. Like this is going to be a huge area around security. It's already a big topic.
Yeah.
And then, when you layer in AI where people don't like fully understand how it works or why it works, it gets a whole lot. Yeah, that's a whole nother ball game to play with. So, with that, there's going to be more compliance that comes along, more security requirements with all that. But like, I think you have to do it to keep up with.
Oh, for sure.
With AI. Yeah.
I mean, I'm wondering from like a resourcing standpoint, because at the end of the day, like, it used to be, and this is getting super philosophical, but like back in the day, it was like, well, which tribe had the bigger, stronger, warriors, and they can kind of fend and defend themselves. Now it's like, who's got the guy with the fastest fingers to type and the biggest brain who can sort of figure out the algorithm. And with AI, it's like having an Iron Man on your team. And I think there's some sort of like war brewing between the good guys and the bad guys, because at some point these bad guys could just roll with this, and if they're smarter than the guys defending on the good guys, like, that's a scary thought for me.
You're going very macro with it. I like that. So you're thinking, real big. I think about how is it going to get applied inside of accounting, and how's it going to impact like the industry. And as I've used it more, I very much view it as a productivity tool.
Okay.
Like, I'm curious if as you've dug around with it, it's going to automate a lot of work, but it's going to automate a lot of stuff that people don't like.
Yeah.
And what it requires is to work well with ChatGPT. You need to understand the concepts of accounting and why things work, and really like have a good deep understanding of why things work. Like, our controller Greg and we had our one-on-one last week, and we spent 45 minutes on ChatGPT going through ASC 842 lease recognition, and the thing was wrong. So but if I were a bookkeeper who didn't know anything about GAAP accounting, I would have just booked those journal entries that it told me to. But Greg and I have enough experience to where we were like, wait, that credit doesn't make any sense. And you go, do you have us as the lessee and the lessor? And it's, oh no, sorry, I was thinking you were the lessor in this situation. And so it flipped it, so it corrected it. But like, had we not had good GAAP accounting knowledge and been CPAs, that's probably something that you can't really work with all that well, and it'll end up making mistakes. So it's really interesting how it's going to like elevate the level of work we can do, and make the knowledge that people gain through audit really like that much more required and really valuable. So that, to me, the big shift in the industry and your knowledge is going to be, you can't be an audit and just go through the motions of taking and tying work papers or anything like that anymore. Like, the notion of rolling it forward, just knocking it out, whatever, that is not going to lead to you being a valuable employee in the future. You really need to grok like why things are happening, and why journal entries are booked a certain way, and why different processes fit together. Like, understanding the why is going to become that much more important for like remaining relevant in the workforce. I don't know if you think I'm crazy, or if that's what you're seeing as well.
Well, I think it's you skip that entry level stuff and you go straight to the reviewing. I mean, what I'm thinking about is like, all right, auditing. Am I going to audit now the work that's been audited? Like, I'm going to have ChatGPT pull a bunch of entries, check them, do all that work, and then me as the senior or as the manager, I'm going to review that. But usually you have some sort of faith and trust in your employees. You're not going to review everyone, but it's like, well, every once in a while, I'm going to check, make sure they properly vouched, the transaction and made sure everything was good there. So now it's like you're doing an audit of the audit that's been done, and I'm wondering like how far can you do that, right? Because then the partner's just auditing like a couple of the things, and it creates a whole chain. But I guess it's going to come down to at the point of like, at what point is ChatGPT or whatever AI deemed reliable enough? From a percentage standpoint, it's 95% of the time correct, and it's within material. Within materiality. Of being wrong.
How do you? That's a really interesting concept. Like, how do you audit stuff where you don't necessarily know how it occurred?
Right.
Like, that's one of the. Let's say someone figured out a way to apply knowledge to a transaction.
Yeah.
Like, where did that come from? How do we know that's right? What happened? So that's why I think human intervention is going to be a thing in accounting, because it's such a specialty. And then not only is it a specialty, but within a business, it's unique, across different businesses. Like, for example, we have two companies in our client base that do the exact same thing, wildly different accounting functions. And it's because of how their internal processes, systems, like employees, all this kind of stuff, they're structured differently than the other one. And so they have different nuances. And so you can't just take the same like narrow AI and apply it to each of those companies. It has to be a little bit more generalizable. But when you get into general AI, then it's like, how do you audit this stuff? So that presents like a whole really, could make auditing easier. It could make it harder. I don't know. It's going to be fascinating how that plays out. Like, what do you, like, when you think about, I don't know, that notion of applying knowledge to a transaction, like, but you don't know where that knowledge is coming from necessarily.
Well, I mean, I remember when I was in audit, your sign off was considered proof. That was like the evidence. So like, if I was the senior, I was reviewing it. Well, you've signed off on it, so my proof that it's been done has been you signing off on it. But there's always human error, and so at what point, maybe if if I find out that this AI is actually more reliable than a human, 75% of the time you're wrong as a human, but the thing's only wrong, or 75% of the time you're right as a human, and the AI is 95% of the way right.
What percent accuracy do you think it has to have before we can start to like really rely on it?
What's materiality on the engagement?
That's a good question. Well, you'd have to look at it in like percentage of transactions. I don't think because
I guess honestly, like I would have to say this would be an interesting survey. Maybe you survey a bunch of managers and say like, when you're reviewing work papers, how many times do you find significant or insignificant mistakes?
Yeah.
And sort of get some percentage of gauge of like how often are humans actually incorrect?
Yeah.
And use that as the baseline for where that needs to cross, and then add 5 to 10% to it.
Yeah, because I remember. So this is for the auditors listening in, just so you
Yeah.
can understand how painful it is on the client side of it. Like when I was a senior accountant doing revenue, I remember talking to our CFO, and I was saying, dude, there are over 1,000 manual data entry items that I have to do on a monthly basis. And that's today. Like we're scaling. It's going to be 2,000 in the not too distant future, right? And so let's say I'm an A+ student and I get 99.5% accurate. That is completely unacceptable from an audit perspective, and we will fail the audit. So I don't know where you draw the line, but if it's 99.5 on a couple thousand, then presumably that accuracy rate has to be pretty high. And at what point are you talking about you need 99.99999. You got to get to 4 nines or something like that to get really accurate. Like that'll be, and then the auditors are gonna, do they want to give up work? Also, they might have higher requirements to be able to keep those billable hours going.
Yeah.
How this plays into audit is fascinating. Like I'm, curious what your take is here, but audit has its own issues, and how can AI play into like helping that side of the table?
Yeah, I mean, I think from your standpoint, as far as the productivity goes, I think that's probably the most useful application of just getting some of that mundane stuff out of the way. I mean, we've already been like outsourcing things to, other countries where they're able to send them the work papers and then they send you back. And that was supposed to be a way to avoid interns or even the level 1 staff on engagements. And those were loaded with errors. And so everything's going to require that human oversight and review anyway. So in one sense, it's just like, well, if it's cheaper to have this bot do it than to hire a bunch of interns or a bunch of associates to do it, you get to the same place anyway, and you're still going to have all the review and fix-up work. But I think it adds to the realization that these engagements have, and obviously every big accounting firm just cares about having that higher realization. They're not going to lower the rates, right? They're not going to start charging clients less.
Just hopefully they make it a little more profitability. Like
exactly.
I'm rooting for audit. I think it's important, and they need to drive productivity to get profitability. Really is where it's at, because I don't see where else they're going to go. So I hope this makes audit easier for all our auditors out there. I hope this makes your life much easier at some point. And
I just on a macro level, I do view hopefully one day where robots do all that basic work, and you can just be out on a jet ski while while the work papers are getting tick and tied. Right?
Or you're doing higher level, more interesting discussions, right? And it's like I think that's a very real thing that could happen, and that's what's more interesting about our profession. Like that's where you learn the cool stuff, right? Is by talking to the CFOs or the controllers and understanding processes and like what's going on behind the scenes. That's the fun stuff, and we can get more exposure to that.
Yeah, it's there if you want it. And that's the biggest piece of advice for anybody out there. So speaking of that sort of ChatGPT and how it impacts audit, which we've kind of already touched on, PwC told their employees that they can't use it to filter off work too, which makes sense because there's a lot of confidential data that's being transferred. So you can't
I was trying to figure out the angles for how you could work this. Okay, so that's a great reason to not use it. Yeah, you can't be loading up confidential. What do you think the use cases are in audit right now? Like if you were going back, how would you use it today?
I mean, I would think, okay, hey, can you identify? I mean, you could stratify, right? Where, okay, I need you to pick 25 transactions between this dollar value and that dollar value that occurred between this date and that date. Identify all repeating transactions that happened at the end of each month. I don't know. I would just have it go and do selection. I don't think there's a way at this point, unless it's scanning the PDF for the invoice date to make sure it matches. I mean, I don't know if that's a capability. I mean, I know it's definitely an AI capability. I don't know if ChatGPT is doing that, but
well, it's okay. So that's really interesting because
I would have to upload the client, invoices and the bills, and it's got all the sensitive data on it.
Yeah, well, you can also create the functions inside of like Excel now, and so you're using ChatGPT inside of Excel to grab data and get like I've used it in the most basic capacity, right, which is typing into the user interface and telling it to do stuff. Like an easy one might be write a write an audit opinion for me about
Yeah,
this,
yeah, yeah.
and it can just draft an audit opinion
yeah.
for you. That's not a problem, and that seems like something that should be fine. Like, is it that confidential to put together a standard audit opinion that's available via a template on Google? I don't think so.
No.
But yeah, if you're using a ChatGPT function inside of Excel that includes very sensitive client data, I could see that definitely crossing a line. And yeah, that feels like a no-brainer. But for stuff where it's not confidential, I mean, you got to allow your employees to use it soon, because it is a massive productivity tool.
So now that I'm thinking about this, because we talk about how it impacts audit in that basic level, how do you train employees? Like, I feel even though as an intern or as an associate, maybe I was just copying and pasting last year's note into this year's note in the audit files, it's making me familiar with the program. It's making me familiar at least with what are the things that we have to disclose and what do we have to document for this audit. If we sort of skip that level, and this is kind of how we're dealing with the whole remote virtual workforce of these people that never actually sat with the senior and they were kind of going through what everything is. They're just kind of maybe blindly just copying and pasting, and you're not actually having that learning experience.
Yeah.
Now you have seniors or managers who actually aren't as qualified to review the work. So that's another thing I just kind of thought of.
Well, that's why I think it's about teaching the why at training. My training, I remember it was just telling you what to do. It was like, here's the software that we use for audit. And dude, you'd be sitting there, they'd be going through a PowerPoint about how to use the software. And it's like, just give me access and let me fiddle around with it. That's how you learn to do different things, right? It's just kind of learning it on the job. So if you teach the concepts of why ChatGPT works and like what the challenges are and reframe what your new job is, then that's how you do it. But it has to be like in a formal training setting. And we're about to roll out our own, because we're going to start using it on the software side. And so Colin, our CTO, is going to roll out training with our engineers on how to use ChatGPT to work more efficiently. And like, you just have to train people on it. And I think it's starting with the context, explaining the why, and then you do need to move into specific examples of like, here's something we used it for, and just walk through it to like spark the imagination. And then it's so broad that people can then run with it after that. So it's going to require full on retraining of people and getting them excited about it. And it is exciting. It shouldn't be viewed as like something that's dangerous.
I mean, when it comes to that training, do you have to have them, I don't know, have a certain requirement of how much time they have to spend manually doing it first before they can then have permission? Because I'm just thinking of like, I learn best when I just do it with somebody, right? And because you could explain the why, you can give a webinar and you're like, this is why we're doing this. Here's all the accounting concepts. Accounting classes are great for giving you this fundamental theory, but you don't actually know what you're doing until you actually start doing it.
The best that I move into group projects. That was where during training we would do the PowerPoint thing like I just mentioned, and then they break you off into a group of 4 and you work through like a mock audit together. That to me was like where I actually learned what to do. Did you guys do that?
That would have been a great idea. Ours was just straight up like, here's here's this module, here's what it does. I mean, they'd have some exercises that you can kind of do, but I like that group idea, because it's like, we need to do this audit. How do we get it done? What are the things and the steps that we have to follow? And that would have been useful.
And I also think that in audit, like the fact that you've never done the work and then you're auditing it, that just puts you behind the 8 ball for how to do it. It's crazy, right? So I would say, let's use a cash account as a super basic example. The training order I would go in is I would start, step 1, if you pretend you're an accountant or a bookkeeper, here's how you do a bank reconciliation. You actually walk through preparing a bank reconciliation, doing the reconciling items, understanding those. So you go through that process. Step 2 is you go through auditing it the old way. So you audit the schedule that you just prepared. Maybe you have someone else, like you grab the other group's, bank reconciliation. You audit their bank reconciliation. So you go through that manually, then you learn how this works, why we do this, what are the audit procedures. And then it's like, okay, now if you're using AI, here's how you can apply AI to make what you just did way faster, to do that way faster. And that to me feels like the appropriate order. That's how you really get the context around the why. And then you just do that for every balance sheet account. Go down the balance sheet. That's how you have to make it work.
Were you the one who was telling me about the pitch of how, I don't know, we train people to get them into the staff roles before they do that? Going into audit?
No, I think that's a really interesting opportunity. Like thinking of accounting as a trade school, more like, here's what we're going to focus on is how to actually close the books and be a productive accountant and go in-house at a company and work. And I don't think that requires 4 or 5 years of education to get to that point. That's like, you could probably do a year or 18 months of education, get proficient enough to go do that work. And then, audit firms have their own education requirements. But I would argue, if you graduate high school, go to a trade school, accounting for 2 years, and then work in accounting for 2 years, you've now consumed a 4-year stretch. I would rather hire that person than someone who went to school for 4 years and took classes about accounting. Like, they're going to just hit the ground running and be better at that job and understand why, because they've actually done the work before. So I think it's it's a really interesting twist that could go out there. It does not work with today's university model, the hiring model. Like a lot of things would fall apart if that's how it transitions. So there's no way today's universities are going to shift there.
Yeah.
It would have to be a whole new approach to like a trade school specifically dedicated for in-house accounting.
Yeah, I wish I could have done like actual bank recs that you do in a staff accountant job, as opposed
Bro,
to
that's
just,
the most twisted thing I've ever heard.
Right?
I wish I could have done more bank recs.
as opposed to just like writing it on a piece of paper, you know, what you do on a test, and you fill out we were taking tests on a piece of paper, right? So you're just, all right, do the bank rec, and it's half filled out, and you're just popping in numbers. But that's, again, it's accounting theory, and it's not actually accounting work that you're doing. One example is just like, I have a friend that wants to hire somebody. How do I pay them? We want to put them on payroll. I'm like, well, I know the journal entry that you should make for payroll, but how to actually pay somebody? I'm like, Zelle, PayPal.
Right?
Like I have no idea what the mechanism is.
I've heard you cut checks. I think that I think that's how you get it done. That's the exact stuff. It's the how behind it. Like school is, I guess, the why and the theory. You don't learn the how is on the job. Yeah. That's how you learn the how behind all that stuff. So it's a fascinating
the
time
mechanics
right
of
now.
it all is insane.
But I think it's really exciting with AI and ChatGPT and GPT in general that like it could present a really interesting opportunity to make it more fun, but just more engaging at least.
Because like the mechanism, even like, from a VC, right? Okay, well, you have to raise money. I just go to somebody and they just give me a bunch of money and then that's it? Like, no, there's actually mechanisms. And somebody who perhaps didn't do that right, which is a great segue into.
Perfect segue. Well, in some ways he did it well.
Fascinating that he accomplished something absolutely incredible, and he will go down in infamy.
Okay, so this tagline, when you mentioned this to me, right, I thought you were joking the first time that you brought it up to me. So ask politicians for donations back. How do you do that with a straight face? How do you go, especially when they're taking it easy on you?
Yeah.
I don't get it.
I mean, if you like twist this headline into what it's actually reading, it's basically like, we gave you money to protect us. You didn't protect us. I want a refund.
That's exactly what happened.
It's like, my blackmail didn't work, so I want it back. I mean,
it's kind of nice to see that you can bribe the government and not necessarily get away with it at the end of the day. When your fraud is of such massive scale, there is some limit that the government has, and politicians will step up and start to not just back you no matter what. So that's good to see, I guess. And then the gall to ask for your money back is something else. I've never seen anything like this.
Well, here's the fascinating thing, though. It says, with regard to the payments that are not returned voluntarily, FTX said its debtors reserve the right to commence actions before the bankruptcy court to require the return of such payments, with interest accruing from the date any action is commenced.
Oh, so is this like in the Madoff case where it's a Ponzi scheme, people have made money off of it, it's like getting siphoned off to other folks,
right.
Then the government's coming in and saying, no, that was all illegally had. They then confiscate it and bring it back and then distribute it to those who own the crypto?
It seems like it's something to that effect.
Okay, that makes a little more legal sense to me. So it's like, all right, it's the new guy who took over FTX, who's cleaning everything up, going through bankruptcy, trying to settle it up, and then get the okay. So, all right, so that makes accounting sense all of a sudden. This is why it's great to be an accountant. You can filter through this stuff, and you're like, it's just an accounting bankruptcy process. Actually, it's not quite as obnoxious as the headline makes it seem like. Like it's not Sam Bankman-Fried being like, hey, you didn't hook me up, give me my $1 million back or whatever. It's a little different. It's actual legal proceeding.
So I just want to touch on that for a second because I think you have more familiarity with this bankruptcy thing than I do.
Unfortunately, I audited a bankruptcy. Okay. It was a sad dude. I was like, it was me and one other accountant in this empty building winding down a company. It was the most depressing audit.
So this new guy comes in and his job is to just close things out and then pack up the company and put it in the graveyard.
Yeah, he did Enron as well, right?
Wow.
The CEO who took over, the last one he turned around was Enron.
Wow.
And that's why he was he's testifying in front of Congress, and he goes, I took over Enron and liquidated and dissolved them, and what I've seen here is much worse than what was in Enron.
Wow.
Like there's zero document. That was where he talked about their approval process for expense reporting was emojis in Slack. Someone would request to wire like $1 billion somewhere, and it would be like a thumbs up Slack message that's how that would get approved. No controls at all, no board of directors. And so this guy came in. He's like, I've never seen governance as bad as what I'm seeing at FTX. And then he started slamming on QuickBooks because they use QuickBooks. They're like, what was their market cap? I don't know if it's like 40 or so, it was something crazy, and they're running on QuickBooks. Speaking of mid-market solutions, right? They should have at least been on Intact or NetSuite at that point.
I don't know if I'm mad or upset of like, how did I not? I mean, not that I'm evil, but it's just like, this seems like it's so easy to just start a Ponzi scheme or to start a Firefest and just raise a whole bunch of money.
No, it's really fascinating. Like looking at all the fraud that's going on right now, and I think it's a symptom of just free money being available. Like this all happened in 2020, 2021, when raising money was a joke. I mean, it was just, there's free money out there. Everyone's trying to make, get rich quick. And when someone comes in with an amazing story, like this guy's pitching investors while he's playing like League of Legends or something, but he's telling this story about how I'm going to replace all currency. And as an investor, you're sitting there like, this guy's a genius. He's going to replace currency. That's the biggest vision I've ever heard. Oh my gosh, that's insane. Like, let's give him however much money he wants at whatever valuation and not do any diligence around it and not require a board seat or anything like that. And then I think back to our fundraising process. And I almost feel like it was very much like the accountant in me, like, oh, of course we have a board. Yes, you can have a board seat. That makes sense. You're putting money in the company, and sure, we'll provide all of our documents for due diligence. Like this guy was saying, no, we won't provide any information to people. And just the accountant in me, I can't imagine answering that way. Yeah. Because if I'm an auditor and someone says, no, I won't provide that to you, I assume they're doing something shady. Right. But I guess that's not how investors who are in the middle of an investment frenzy think. And but I always thought if Meritech, who's leading our round of funding, asked me for information, I said no, they would assume that I was committing fraud and just back out of the deal. But apparently that's not how it works.
And is there no accountant on the team of these investors to be like, hey, we should be doing this due diligence?
No, there's not.
Also, I think it's scarier than if so obviously this guy Sam is not an accountant.
Nope.
I would be more scared. I would be more scared of a company that was like fictitious, that was actually being run by an accountant, because I would be way more detailed in making sure we're doing things by the book. So if you do come in, it's going to look super clean, and you're like, where the heck did the money go? I don't understand.
That's
Enron actually had some pretty complex systems in place, to make like really tricky accounting stuff that they were doing, which was like high level finance.
Have you seen Smartest Guys in the Room?
No, I haven't.
Oh, it's okay. The documentary about Enron, highly recommend it. But the way they kind of arrived at this, and they were saying that it all started with them getting approval for mark-to-market accounting from the SEC. Yeah. And that was so important for them. That was what led them to be able to commit fraud. Yeah. There's a scene where they get the letter from the SEC approving it, and the executives all threw a party in the guy's office. Like they were popping bottles of champagne, getting tanked, because they knew that was their ticket for being able to do whatever they wanted. And and it was they did it really intelligently. So investing in a company run by accountants, I feel like, is either really good or really bad. Yeah. Because they're either ethical and really buttoned up and doing things the right way, which is how we do it at FloQast, or smart enough to commit fraud because you know how to do it.
It's crazy. But wrapping up the up-to-date stuff is just a little thing, obviously touching about ownership transparency. Yeah. Is FinCEN provides time estimates for compiling the beneficial ownership interest, the BOI, and apparently it was taking like way longer, over more than a business day, to get information of who owns a company when asked, to just provide that. And they said it should be like 90 minutes.
Yeah. What is the problem? Okay, I don't have a lot of experience here. Do you know this? Do you know this stuff well? Like
I don't know who necessarily is the people that are asking necessarily. It has to do with the Corporate Transparency Act.
Okay. So we're in the governance side of everything.
Yeah, and so starting in 2024, it's going to be a requirement that it needs to be like within 90 minutes that simple ownership structures can just provide this with the ownership. I feel like that's
Does this apply to public companies?
I would.
Here's my only pushback on it is at public companies, you're issuing stock options. So the ownership is, it's like the cap table is like a living, breathing thing at a company that grants options. So I could see, but that said, there's software now to help manage your cap table. And you should, like, if someone asked us what our ownership structure was, we could produce that in 10 minutes and send a report over.
It should be that easy.
But if it's like your average private company where it's owned by two people, 50-50, it is what it is. That should take 3 minutes.
Well, this is primarily for the simple, the simple structures and not the complex structures, which obviously a corporation would have a more complex structure. So the simple ones are required to do it, quicker. But to your point, I mean, if you're a large, complex company, you should have a comprehensive system in place. Like I know I get the email every month. I was telling the team, I was like, guys, it's options day. I was like, hey, I got
vested. You get you get your message
vested.
from. We use Carta internally. Shout out to Carta, great system for
awesome.
for using that. And any up to the minute, I can run a cap table and know what's vested, what's unvested, what's granted, what's in the option pool, how much does everyone own. It's a piece of cake. So this feels like a no-brainer, and I like putting a time limit on it because if people can't provide that, they're probably doing something shady to compile, put some information together, and send it around.
And especially if you're a potential investor and you want to know like where's this money going to, and you have all these shell corporations and companies and pass-through entities, and it makes it intentionally difficult to figure out who's actually funding it and who owns it and what's their intention and. Transparency is always
that's
good.
the better use case. Okay, so like this entity string and figuring out who this owns this and this owns this and putting it. Yeah, that's totally where like fraud starts to insert itself. And if you get caught, like you're then frantically trying to prepare stuff to cover your tracks on the back end. I like this. I like this coming in. I like this role.
If you leave it dirty, you could be like, oh, it's hard to find stuff. We'll get it back to you. And this is even when you come to auditing. How many times do you go to a client and it's like takes weeks for something to get ready? And if I should be able to do investment cycle on day one, if I can have you just print out your report or equity cycle, right? If you're just able to provide me with the equity information, it doesn't have to be this whole big thing we got to compile and put together.
Yeah, when it's let me put that together, you start to get a little sketchy. All right, best fraud story I heard when I was at EY. A woman was working at an insurance company, and they were looking at insurance claims and rebates that were given and everything, and there were a bunch of claims, and they did their sample selection, and they picked a bunch of people who had passed away, obviously, and they landed on a couple people, and they realized that these. So let me take a step back. They go in to the controller's office. They make this request, and she goes, "Yeah, sure, I'll get that to you after lunch." She never came back. That was the end of her. She never came back after that. So they came to find out that when they dug into the detail, they happened to select a sample amongst like hundreds of thousands of sample sets that she had created fraud on. And so she had set it up where she would issue premium claims on the behalf of people who were apparently deceased, and that wire would hit her bank account after that.
Wow.
So she made, I think it was like millions of dollars doing this. And then, so she was asked, like, if you're not committing fraud, you probably have that report ready to go and you're good to go. But instead, she had to go to lunch before she could provide the information, and then intelligently never came back after that. So she's probably hanging out somewhere, a bit of the inspiration for Tracy and PPC.
Yeah, I was just thinking that. I was like, she's Shawshank Redemption. They're down
Off
in
to
Mexico.
Enjoying life. There you go.
I actually had a story that was very much the same.
Yeah, lay it on me. Love a good fraud story.
Yeah,
okay,
it was fake vendor fraud, and I was working on an engagement. It was a not-for-profit, and they had a whole bunch of different regions.
Non-profit. They were stealing. That's messed up.
Yeah, it's good people, bad people are confused to think that not-for-profits don't actually make money, which they do, and the people who run them still make plenty of money. And
they pay fair market value salaries. That's for sure.
Just because the company doesn't make money doesn't mean everybody in there isn't cashing in. But there was regional controllers for each of the different areas that they covered, and one of them had created. I mean, it was just no checks and balances, where they had created their own. Which was in the rules and the policy, right? Like if it was over the $10,000 threshold, then it had to have dual signatures. So obviously you set up a business that's $9,000 a month, and it just goes through the cycle. And they discovered it, of course, through. I mean, it's like a classic story that you could teach in a textbook. They discovered it through. She went on vacation. The bill came in to pay.
Oh,
what is this company we're paying? And then they realized that all of it was being sent to her own personal account.
Yep.
Just
there you go.
Classic vendor fraud.
So you can't go on vacation when you're creating vendor fraud. You can't do it. Committing vendor fraud.
But it just makes me think of there's so many entities that they're just not even thinking about it. A bill comes in and they just pay it. Yeah. Especially if they're old school and they're not on systems and stuff like that. I could have just sent bills to some of these places, and odds are somebody would have paid it.
Yeah, because an AP clerk isn't. No. They're not picking their head up, and they're just cutting the check and getting that one off their plate and moving on to the next one. It's it's pretty easy to just get stuff paid. I totally agree.
So let's move on to Have You Read It? And the Reddit community, obviously, the accounting subreddit is just a bunch of savages. I mean, it's the favorite place to let out all of that.
It's definitely for venting, but I do love it. There's some good stuff on there. So, what do we got today?
So, this is the Have You Read It section. So we're going to be going through now one of these posts that is from the accounting subreddit, which you're guaranteed every week there's going to be something exciting. So we try to find whatever the best one is, and we'll read it out here now. So this one was, how do I code a half hour spent crying? My manager made me cry, and I sat in the bathroom for half an hour having a panic attack. How do I code this time?
I should note that I'm an intern and just started a month ago and have anxiety disorder. LMAO. Oh, I don't know if that's that much of a laughing matter, but I would code it. I think that's personally that's some personal time. So I'd code it to G&A. That would be mine. And I'd definitely key in the half hour and code it there. What do you? I could also see an argument for it's hazard pay. It's on the job. The engagement caused it, so maybe it is on the client.
I mean, you are, if you're at the client's site, I mean, if you go to the bathroom to wash your hands or, brush your teeth or, tend to, as we say in production.
Yeah. Okay. So how incremental did you get with your hours when you were booking them back in the day?
I was just doing by the hour, honestly. Like,
Me too.
They encouraged every 15 minutes, like every quarter of an hour, but most of the time I was working on just enough of a thing for a day. And it's like, over the course of the week, I know how much I'm supposed to bill to each client for the amount I'm working to each of them. It's usually lining up. I wasn't really ever doing anything crazy.
I never had like a clock where I started and timed out. It was just like kind of a ballpark at the end of the week. So maybe this person should add up their cries over the course of a week and just book an hour of cry time. This is so sad.
It's personal development.
Dude, unfortunately, this is so common with like, I don't know if you had audit engagements where people would have like cries and breakdowns and stuff.
I got put on an engagement that I was expecting. I'd rolled off the previous one. Mm-hmm. So 2 of my days got let go of, and I was going to be unassigned. And I'm like, great, I get to go back to the office, play some ping pong, play some basketball.
You guys had a ping pong table? That's pretty sweet.
We had a ping pong table, yeah. Right, it was in the conference rooms. We had to roll it in and out, but it was there.
Better than nothing.
They were starting, right? And I got there, and it was a company that was pre-IPO. They were like thinking of maybe going public like the next year. And so they were following all of the public guidelines. So everything was expedited with when the audit needed to be complete.
Okay.
And I got brought in after the whole entire team had rolled off and they were on another engagement because this was during busy season. And I was coming from not-for-profit, like not busy season, because we had our busy season in the fall.
Oh, nice.
Yeah.
All right. Hey, there you go. 2 busy seasons.
Yeah. So I rolled onto this thing and I get there and it's just the senior. And she's like expecting me to do all of this. All I had to do was like tie out the footnotes, right, to these financials, which were pretty elaborate. And I've no familiarity with any of the work papers, with any of the audit files. It's just, here's the financials, tie everything out. And I'm like, okay. And I'm thinking of when I was working on not-for-profit clients, the auditors are a little more hand in hand with the client. So it's not as
a little
like
more helpful.
Yeah, a little more helpful. Not to say that there's not independence, but when you're dealing with the public, you have to be like completely like, you're the client, we're the auditor, we're separate, we're not one and the same. In not-for-profit, it's a little more like we're friends. Like, oh, what do you need? Oh, how do we make this footnote? Oh, okay, this is the words that we use, and then we give it to them. In the public, from what I was seeing, it was more so like they prepare it. It's all done by them. We review
it's not. It's way more adversarial at the public company
level.
So
I'm looking at these footnotes, and I'm not finding any of the work papers because we have a footnote tie-out work paper in NFP, which just is us basically preparing what the footnote should be, and then the client just puts it in because they don't really care. They're like, oh, if you're the auditor and you say this is what it has to be, then this is what it is.
That's how public companies should be doing it. My public client had that. It was just a binder they would hand us, and it had all the support for the footnotes. So, all right, what'd you do? I
spent the whole entire day just searching through pages and tabs of Excel documents, trying to find the one number to tie out. I had no idea where to find it. I was overwhelmed. I just being promoted to senior 1 like later that year, so I was just an A2. I remember calling my coach and senior manager and being like, I went to one of the private rooms and I was like, I might need you to like pull a string and get me called off of this thing because this is the most hostile environment. Like I see the senior, she's like kind of crying and she's upset because she's like got a kid back home. She's working till like midnight. She's upset. I'm like, I wish I could help you. And she's like, it would help if you just got the work papers done. And I'm like, I want to be of use here and I don't know how to be of use.
You're like, I'm trying. Going on a new engagement at the end is it's so hard to pick up the pieces and wrap that stuff up.
3 days tying out footnotes, which should have been like a 4-hour process.
Yeah. Wow. Okay. I'm sorry, but hopefully you learned something.
Yeah, I definitely learned a little bit. So this is what Reddit had to say.
What did the community think? I'm really curious.
Bill it to whatever client you were working on at the time, like the rest of us.
All right, so this is pretty common.
Yeah, as far as I'm concerned, I'm thinking about a client, and that's client work. Panic attack about work related to the client, billable.
Oh man, I even dream about working. I'm billing that. That's awesome. I know a manager who literally bill a half hour or an hour of dream time to his Wow. Okay. So they built Dreamtime because they came up with a solution to a problem that the client had.
Right.
That's kind of interesting. Yeah. If you have the shower moment.
Yeah.
Does that count? That's
So this is what brings it, and I'm curious to your take on this because I was thinking about this all week actually. Once I found this post, we've moved to all white collar work, right? 120 years ago, predominantly, even 100 years ago, right? Predominantly blue collar work. It's assembly line. It's task oriented. You do the job, right? If you're a garbage man, you have a set number of houses. You do the job, and when you leave, it's over, right?
Yep.
There's no thinking about, I wonder how I'm going to do it tomorrow. It's like, no, I'm going to go back on the truck. I'm going to go to the houses. I'm going to pick it up. You're working at a car factory. I'm going to put these pieces on. When I leave, there's no thinking about it. Now, everything is so critical thinking involved that you don't really ever separate from work. And this doesn't even have anything to do with remote, virtual, or anything like that. It's just, you don't stop thinking about it. You're the CEO of a company. You're not, well, it's Saturday, so I'm off duty.
Actually, I was just talking with someone about this yesterday. When I was like a staff senior, I'd be auditing payroll, and it's like, wow, these people make so much money. VP, C-level, what do they do? Why is that so valuable? And I realized that a lot of the compensation for executives is tied to the amount of stress that comes with the job and how it is 24 hours a day. Like it really, I'm stressing out about FloQast all the time. Like it's kind of sad, but like I'm at dinner with my family and I'm thinking about FloQast. That is kind of you're being paid to effectively give up your life for this. And I do think that's worth like a good amount of money for you to be giving up your time and life in many ways. And I think that's in general maybe why white collar makes more money is you're giving away like your free time, you're working more, it's more stressful, and that's why you get paid. It's not I don't know. I wouldn't say that doing accounting is that much harder than being a garbage man, but like, and they both provide like huge value to society. It's just that one is way more stressful, and you don't tune out when you go home, and that's why you get paid a little bit more for that. That's where the value comes, at least from my perspective.
One ends and the other never ends. It's just ongoing.
Well, hey, when I was a staff or a senior, I was able to tune it out, man. I left work, and that's part of what I like about a commute. Actually, the commute turns off work.
Right.
That was what I noticed is like, we're in LA, my drive home was like an hour, but I'm in the hour, I'm listening to music or a podcast or whatever, and I forget about work and I get home and it's like hanging out with my girlfriend at the time, my wife now, and it was like all was good. So but being a CEO is very different. It never stops.
Yeah. And I've always been curious at what point down the chain, because even at like everybody anybody who's not doing just a task-oriented thing, like there is something you could be thinking about for work. And I'm wondering, and I guess it's just each person has a different threshold of like, well, I'm making enough money to feel like I can put in this extra time.
I'll tell you, I think it's when the responsibility is on you. Yeah, that's my take. And it's like when you get to this, it's as quick as when you get to the senior level, and all of a sudden you're responsible for maybe managing someone, for hitting a deadline. As soon as it's on you, that's when it starts to fade away. But if I'm the staff and it's just like I did the work that was assigned to me, I don't care about anything else. Like whatever, you can stop. But I noticed it was as soon as senior where you got people and it's more stressful.
Yeah, for sure. And I think you see it very visibly in the managers who, it doesn't matter if everybody's rolled off the engagement, they're finishing up the work papers that are open because they have to get it to the partner, and that's their job. That's their neck on the line.
They have the ultimate responsibility. And then that moves up to at the end of the day, partners. Like a lot of people joke about, partners aren't in the office much, blah, blah, blah. But they are stressing about stuff all the time. And it's they don't turn off at home. So that's the, for those listening, when you're like, wow, these partners make so much money, blah, blah, blah. It's they're tired. They're tired, they're stressed out, they have a lot going on, and it's fair market value for a reason.
For sure. So there was a couple more comments that were on that. Literally did that today. If I'm thinking through your state allocations in the shower, it's going down on the timesheet. So like we said, And I think that's true. I mean, that's really how it is when it comes to the white collar things. Like we try to say, well, it's a billable hour, but I mean, how much time do you spend thinking about what you're going to have for lunch, and you're not billing that time differently, or
or like you're
having a conversation.
You're chatting with the other senior. You're making jokes about something. Like I don't know. You're back and forth, and you just kind of do a swag at the end of the week and book your hours.
And I think at the end of the day too, like. I always found it ironic that they had all this like the eating hours or the underbilling or the overbilling. At the end of the day, like this is what the fee was for the engagement most of the time. And you're just going to write off the difference anyway. And either you have a higher realization or a lower realization.
That killed me about the realization and people eating hours. I'm like, this is made up. It's a fixed fee thing. Who cares about this? And everyone would like, the pressure to eat hours was fascinating to me. And I took the opposite approach. I'm like, if I eat hours, I am setting up the people behind me for failure. Yeah. Every hour I eat today is going to really negatively impact the next person following me. So I was actually very strict about like, I'm booking the amount of time it took. And I had a partner get pissed at me. I'm like, sorry, man, it is what it is. And like, it's going to be this way next year as
Yeah.
well. Don't have that expectation of the team. And
Yeah.
I think like the people behind me really appreciated
For sure.
really appreciated me not caring
beef
about
up that budget,
profitability.
just give them extra space next year.
Yep, totally. Mhm.
So, all right. So that's been Reddit, which is great. Always fun there. So I have this section now, which is that's concerning.
All right, nice.
Which is bizarre news, whether it's media. If we're able to get any videos that are happening in the accounting industry, please feel free to send it to us. We would love to watch and evaluate.
Yeah, share those.
Not happening very often, but just interesting sort of hot takes. And so I thought this one was pretty fascinating. If you let 23-year-olds sign off on audits, you're going to have a bad time. This is from Going Concern.
All right, Going Concern. I love Going Concern.
It's hilarious.
Great.
And this is actually like related to kind of what we were talking about. A 23-year-old partner from this firm. I'm not even going to attempt the name necessarily because I don't want to botch it. They're called Shah Dahandria, and they are the auditors for the Adani Group, which the third richest man in the world.
Yeah. Ooh, okay. I'm very
Using a accounting firm that has, I think they said 4 partners and 11 employees.
Whoa.
For the third richest man in the world.
And probably their only audit client, I have to imagine.
Yeah, I think it's like 7 clients perhaps or something.
This is currently being sorted out. There's some activist investors who I think are shorting the stock and trying to make this more public and everything. And so we have to use things like allegedly and all that kind of stuff.
Yeah.
But yeah, this seems like something that's very shady, and I'm curious to see how this plays out as they dig into it.
Yeah, because they're talking about all these different fraud schemes that they have going on with like. This is where they took it a little step further, right? Where they actually made a bunch of fake websites. But again, if I was an accountant,
who's they? Who made the fake websites?
Adani. They have all these shell corps, and then they have these fake fictitious companies that they were saying they were earning money from or different revenue sources. They were hiding money in these things, and it was like just a bunch of the same generic like offers advisory and consulting services or just very generic services. And they made fake websites, and then everything on it is, of course, just like the stock language, stock photos, and
They went to ChatGPT and said create a generic services website. And go from there.
I mean, again, if I'm doing this, like I'm going balls to the wall where I'm making it as legitimate of a website as possible.
You would think you'd have to focus. Yeah, you'd have to focus on that to not get caught. But okay, yeah, this is a great sign that fraud's going on. Man, I'm curious to see how this one plays out.
It's crazy this keeps happening.
You said he's third richest in the world.
Was third actually. Apparently, they just dropped him because he lost like $36 billion in January.
Okay, and is it the largest company in India? Do you know?
I believe so.
And they're on a public stock exchange. Like it's a publicly traded company, and they've been getting away for this for a while.
Yeah,
but
decades they said.
This is the interesting benefit. So a lot of with Wall Street Bets and GameStop and short selling and everything, like people really started got exposed to that world and don't like short sellers and everything. Yeah. This is the benefit they actually provide to the market is the short sellers. They set the real price for this, and they're digging in to try to find what's wrong with the company. Yeah. And when they find something like this that they think is really wrong, and then put a short position on it, they're going to make a lot of money off of it. No. But like at the same time, they're exposing fraud and getting these things sorted out and bringing it to light with the public. And so the flip side of short investors is sniffing out fraud and and truly setting the market for what the fair market value price of anything should be.
That's fascinating. That's a good point there too. Yeah,
it's crazy. They have a place in society, believe it or not.
Yeah. I can't imagine being fresh out of college and signing off on an audit paper.
No, who is and then what? He's like the nephew of the 23 partners find the nephew.
I mean, they even talk about the Adani's company. It's like 8 of the 22 people are part of the family. So it's like almost half the company.
And it's positioned as a conglomerate, right? They're in like all these various lines of business. There's probably a ton of resource sharing, and they're making up fair market values that are going back and
making
forth.
up companies. So
there's something here. I'm fascinated to see how this plays out. I wonder what the scope of it's. Is this going to be like Enron level or be a little more muted than that? We'll see.
Definitely concerning.
I think there's potential there. Yeah, definitely concerning. Good one to put in the section.
And then this one is just a sort of interesting sort of popped up. I just wanted to touch on. They're talking about non-compete clauses.
Interesting.
And we got a picture of the FTC building.
Yep.
Because they're the ones proposing this, which is an interesting take. And I'm curious from a CEO perspective. I didn't have to sign a non-compete. I know people who have had to sign non-competes working at public companies because they have clients and it's worried about taking sort of clients with you, which I think is a valid concern. The claim here is that you're depriving employees of potential higher wages and better jobs by basically making them ball and chain to your company.
Man, there are a lot of use cases around this, and I also know that they're really not that enforceable anyway. So even if someone signs one, it's
Yeah.
like it's not super enforceable. It's more of a mechanism for like scaring somebody if they go to a new company. So
Sure.
I think in the tech world, the biggest concern is probably like someone leaves and they have a lot of knowledge about your company, and
Yeah.
do they know the strategy, and can they communicate that to other companies? And that's sort of where the confidentiality clause comes into play. You know, you shouldn't be talking about that stuff. It's not necessarily a non-compete, but it's a non-disclosure
Yeah.
agreement, and you in particular should not be sharing that with a competitor. So like the standard use case is everyone signs that confidentiality, non-disclosure, all that stuff. Then if someone goes to a competitor, the company sends that legal team a threatening letter, just like, hey, heads up, this person used to work here. They know sensitive information. They should not be talking about that. And that's the end of it. That's really like the end of any of those types of situations. What you're talking about where where you have a bunch of clients at a company and you've worked at that firm and built up that client base.
Yeah.
Like the firm did pay you to build up that client
Right.
base. And I do feel like you shouldn't be able to hop to another one that does the exact same thing and then just poach that entire book of business.
Yeah.
So I guess if if it's a true commodity,
Right.
like I think about like wealth managers are a big ones here. They're at, you know, Goldman or JP Morgan or whatever. They have a huge book of business and they're super valuable. If they want to hop to another bank, that bank's going to freak out because they have a book of business of, you know, a ton of billionaires that they're doing wealth management for. And I can kind of get that because it's a commodity at that point.
Yeah.
From the specific wealth manager's perspective, they're going to be like, no, it's not a commodity. They like me. They want to work with me, and I should take my book of business. So I don't know, but I also don't think I've heard of a lot of stories like this, and I think if you really are that good, it's not going to like hold up your employment opportunities. Because, for example, in that world, there's like a year-long rest period, and people will wait a year if you're going to bring over like a book of business like that. So if you're that applies to lawyers, auditors as well, like any profession where you build up a book of business and want to take it to another firm, that would apply to. What do you think?
I mean, from the culture standpoint, the thing that comes to me with the culture standpoint, I think that there is a need for non-compete from that standpoint because I sympathize with the company, right, where it's like they're giving you the resources to do all this sort of stuff. That's like me. That's like we build up the Rapping CPA. He becomes this biggest name in the accounting world, and then I go join another company. I'm like, well, thanks for the resources and all the, you know, thanks for building me up, and now I'm going to go do that, right? Like, that's not something I would do, but I think it comes down to as well from a company culture standpoint, it's train your employees so much that they can leave if they want to, but treat them so well that they want to stay.
Exactly. Like yes. I hope I've created an environment where people don't want to go work for our competitors.
Right.
Because that's a spite move.
Yeah.
Right? You're like, oh, if I'm specifically gonna go work at a competitor,
Right.
there's a little bit, you're either in an industry that is so niche that that's your only option. But in our tech world, like if you have a resume from FloQast, you can go work at any tech company. It doesn't matter. That'll work out. So to specifically go to a competitor is just a spite move because you're pissed off about something, and that's it. So yeah, you're right. It's they shouldn't matter if I'm doing my job well.
Yeah, and I think on the positive side, it is if you've created that environment where you can have the open communication, then it's like, hey, these guys are trying to poach me or whatever, and this is what they offered. You know, if at least you've created an environment where you can have that open dialogue, then it's like, okay, well, we want to keep you, and so we can have that conversation, as opposed to like feeling like you got to operate in the shadows of like, all right, I can't tell anybody that I'm like interviewing over with these people, right? Hopefully it doesn't get to that point, but it's able to nip it in the butt earlier on. But again, that just sets the culture. So the reason of this, I could see why it's good, but I also see from the company standpoint, like you put your neck on the line to build this company and you're trying to hire good people, and you don't want, especially now in a world where everybody's like a flight risk.
Yeah.
Because everybody's just told, oh, if you don't like your job, just go to a different one. This
is tough.
It shouldn't be that easy to get a divorce.
I can see arguments from both sides of the table on this one. So there's definitely some gray area, and I think just like business judgment needs to be applied in a lot of these situations. And but coming up with laws around business judgment is nearly impossible. So we'll see how this plays out.
So on to the final section, which is just a little fun thing to wrap us up. We've got how should we account for memes? And
all right.
Accounting, fintech, business, all the different memes, predominantly on Instagram. A lot of fun. A lot of fun things that just relatable, right? And so how relatable are they, and what's the actual background to it? So we've got here, why did you choose accounting? And the flag says, we do this not because it is easy, but because we thought it would be easy.
That's pretty accurate. Does this remind you of college and this being pretty easy to book the journal entries and do everything and think it would be easy, and then you get into audit and it's very different from what you're actually expecting?
Yeah, accounting was, it clicked on my head and I was like, I love this. I could do this the rest of my life. And then I was an intern and it was I felt like a princess in Disneyland. and then I
so
started
good
working.
with the interns. Yeah.
Oh, they sold you on the dream.
They sell you on the dream, and then you're not doing what you actually studied. And unfortunately, with this meme, it's funny because it's true.
I mean, what were you thinking when you first decided to major in accounting?
What was I thinking? Well, I thought that. So I took the class. I didn't go to school wanting to major in accounting. It was that classic. I took an accounting class, and job security did matter. That was that was before you job hop all the time, and actually having a career and job security mattered, and people cared about that. And that path seemed really interesting to me. The professor did a great sales pitch around that whole side of it.
Sure.
And then I remember the moment for me was I actually did enjoy the work, and it was that. We're doing the balance sheet, and you book a bunch of journal entries, and you get to the ending balance sheet and does a balance and everything. And it's a struggle. You're working through that your first time. You're like, wait, a debit here, a credit here. How does all that work? And so you're kind of struggling through it, and you're problem solving and figuring it out. And then when it balanced at the end, there was a dopamine hit that came along with that. I remember that moment. I was like, oh, that's how the puzzle comes together. That's really cool. And so you get this, it's a lot more problem solving than people realize. And you do get little dopamine hits when you do accounting. And it's when stuff reconciles, when the balance sheet balances, when your audit's done. There are certain dopamine hits within all the mundane stuff that we do.
Video pitch idea is the most pleasing things of accounting. They have all the pleasing, scooping the peanut butter out of a jar when it's fresh.
Yeah.
Cutting a piece of soap in half and it's a clean line.
Immaterial. Being able to write difference is immaterial is one of those moments.
Check. 0.
Yes. Oh, what a moment. When it balances when you get it to the penny, there's that's such a good feeling. I don't recommend it, but it's a great feeling when you get to the penny.
So, this one I thought was interesting. It's just the classical billable hours versus job zone debate. So this is a meme of a guy on his deathbed thinking, I wish I spent more time working unpaid overtime for a public accounting firm.
Yeah, I've never had this thought.
I don't know if anybody has, right? But that's the thing is this is just high level because there's so much you can go into this, but should overtime be a thing or...
should auditors be paid overtime?
Yeah, should there be overtime? Or is it just the ebb and flow of this is what you sign up for?
You mean should people be having to work overtime, or should people get compensated more for working overtime?
Should they be compensated more for overtime?
Yeah, absolutely. I totally. If you're going to sit there and require it as a firm, if you're saying you have to bill 55 hours this week, you should get paid for 55 hours of work. That feels pretty messed up to me. Yeah. At the same time, I think they should be able to ask you to do that because it's just part of what you're signing up for when you go into audit. It is what it is. If you don't want to do it, don't take the job. But you should be paid for it. And I find it interesting that I think you got paid overtime. It's really just the big four that don't pay overtime. My co-founder Chris, my buddy, he went to a regional firm. He got paid overtime. He made more money than me when I was at EY, and he's laughing his way to the bank and happy to work a couple extra hours because he gets. I think it was time and a half is what they did, and so that's cool.
Yeah, we did not have any time and a half. So national, that's.
You didn't get any of it.
I mean, there was the incentive was you get a bigger bonus at the end of the year, right? Which I was like, so I'm going to get $1,500, and that guy's going to get $3,000. Is it worth the extra $1,500 for me to really grind it out? And my decision was no, it's not, and so I didn't. Yeah. But I think what they could do is if they wanted to implement something like this that actually makes sense, you'd have to have. Annually, this is what the billable hours requirement is, which should be something reasonable if you were to kind of back into that number. Yeah. And then if you work beyond that, it's sort of that's how they calculate what that difference is. Because again, if you work 80 hours for 3 months, but then you spend most of the summer unbillable, then you're kind of just sitting around eating away at the resources. You're just an expense at that point.
I like that point a lot. I think you're really onto something because there are the easier summer months, but then there are also people who. In Q3, it might not be a requirement to work 40 hours, but you're still working 60 hours. I had summer, I had 331 clients, I had a 930 clients, so I was always working more than 40 hours. But I had people I knew who were working 20 hours a week during the summer. And if you average it out all over a year, that's really more reflective of your body of work. Yeah. And you take the months where it was required to be 55, whatever, you take the expectation. Yeah, dude, that's really smart, man. That would be a good way to do it.
And that's your incentive to stay through for the whole year because it's calculated at a certain point. So you're not just ditching at the end of,
and then you pay out in mid-February so everyone's there for busy.
Yeah, right.
Could be a great retention tool.
Yeah. Mm-hmm. So,
yeah.
And then the final meme that we've got on here is This is more into the tech field, but it's a tweet. Your body is an API between you and the real world, and you are just a deep learning app.
Oh my gosh. Are we getting into is this a simulation or the metaverse?
This
or
is singularity. We're
we're
coming up.
Are we in singularity? We just don't know it.
I think we're.
Do you believe in simulation theory?
Yeah.
Now we're getting deep. You think it's just a sim?
Are we just I believe the Matrix is very much so a I don't think we're in it right now, but I think it's a 100% possible real thing that either exists already, or not that we're in it, but that it's started. And so you could start to plug in, and I've always talked about this for the last decade, basically, this sensor theory, right? They have printers that allow you to smell, right? They've boiled your senses down to 4 main scents, and any combination of those, just like a printer has 3 colors, and you can print any image. Senses, with your nose, you could do any 4 of these, and depending on the volumes of each and the strength of each, you can smell. Okay, you can also now, you ever feel your phone in your pocket, but it's not in your pocket. So you can trick your mind into thinking that you're feeling things.
Yeah.
You could put on VR goggles and you could start to see things. So now you could smell, you could see, you can feel, you can taste, you could change the way things taste on your tongue, right? We're very close to being able to just plug in and live in that other world. It's just, at what point does it actually look real enough?
All right, so you're a believer. You think metaverse is coming.
Yeah.
How much time are you going to spend in the metaverse?
I am not going to the metaverse.
I like the real verse.
Yeah, I like the real verse. So
wrap it on that one.
With that, we'll wrap it up with the concluding cycle.
All right.
So, I guess just wrapping things up, did this week, or the last couple weeks, right, did it appreciate or depreciate the accounting profession? Are we elevating things with what's going on?
Well, I think we are. So our mission at FloQast is to forever elevate accounting, right? And there's some fun stuff and some not so fun stuff that we have to do. But I think one of the benefits you get out of accounting is just like broad knowledge and being very skeptical about what's going on around you. And I think that was on pretty full display throughout this podcast. Is there's a lot of interesting things that accountants did to expose fraud, or figure like getting overtime, or just being skeptical about things. And I think that's really valuable and allows us to have like more interesting discussions, because we sort of have broad understanding of business and technology and all this kind of stuff. So I certainly hope that we elevated accounting this week.
Yeah, I definitely think so, because even though there's like all these like fraud cases or instances, like it shows the need for the accounting profession, for the need for auditors, the value that you can bring.
You're making a great point. Like, there's a lot of people do their audit job, they tick and tie their work papers, they don't feel like they're providing a lot of value. I think they should look at FTX and maybe rethink about how much value they do provide. If that's an audit that's being really taken seriously and someone cares about what they're doing and they're trying to protect the shareholders, in that example, they could have protected hundreds of thousands, if not millions, of individuals who ended up losing some of their savings account from it being on FTX. So next time you're auditing and you think what you're doing is maybe lame or dumb or pointless, like think about the importance of it in certain situations when there is fraud occurring. You're like saving individual people out on the street a lot of money and making their lives better. So I hope that people feel better about doing audits, and if you could avoid an Enron or a WorldCom and people who have their retirement accounts in the stock market and stuff, like that's a good thing that you're doing for society, and you should be more proud of what you're doing.
That's definitely a great way to get everybody motivated for it. And I truly believe, like you said, that auditing is a lot cooler, as I've learned to appreciate auditing a lot more as I've kind of gotten older, and the need for it is everywhere. And auditing things and just using the same auditing skills doesn't just have to be for financial statements. It could be used for the operational aspects of the company. It can be used for just your general investing knowledge, and it could be used for home inspection.
We'll have to cover this on a future episode. I actually believe that like audit is the way to save our government right now. And we could talk about that on a future episode. But I think auditors can save the United States right now, and it's a really interesting point that we're at.
Auditors
we'll talk
to
about
the rescue, and the final message there is that we're going to make auditing cool. That's where there's a possibility for the icon of the accounting profession. It's going to be in the audit world.
And think about why you're doing your job as an auditor. You're doing it to provide a service to shareholders, but at the end of the day, shareholders are not necessarily just rich bankers. It's people on the street who have retirement accounts that are embedded in these things, and those are people you should care about and want to have their back. It's cool. It's cool, man.
So thanks everybody for listening. This has been an awesome episode, and I think next time I got to have an outro flow.
There you go. Get your flow going.
Spit a couple bars.
Yeah. Well, hey, Drew, I enjoyed the discussion today, man. This was fun.
Mike, lots of great insights, and it's always great getting to chat with you. And for everybody at home, this has been the FinTech Flo. I'm Drew Carrick.
I'm Mike Whitmire.
And we'll see you next time.
Yeah.